This is Greg Davis with the SafeBridge Group's Commercial Savings Solutions Division. I'm going to show exactly how our industry-leading, engineering-based cost segregation studies can help you maximize your tax savings and cash flow directly back to you from your purchase or renovations and improvements of your commercial office property or properties. These savings to you average between 6 to 10% of the cost of your building plus any improvements or renovations which you've made into it over the years. I'm going to show you a totally risk-free way to demonstrate the power of this specialty application if you are a commercial office property owner. So just what is cost segregation? Cost segregation is a commonly used strategic tax planning tool which allows companies and individuals who have constructed, purchased, expanded, annexed, built out, or remodeled any kind of commercial real estate to increase their maximum tax savings and cash flow. Our partner, Cost Segregation Services Incorporated, or CSSI, is the leading professional firm which specializes in this unique expertise. These increases are accomplished by greatly accelerating your depreciation deductions and, very significantly, referring federal and state income taxes, all in accordance with the latest IRS regulations. Simply put, the core principle of cost segregation involves taking all components of a building which are currently being depreciated as real property in a straight line method over 27.5 years for residential rental properties and over 39 years for commercial properties, and accurately, given the latest IRS regulations, reclassifying them into the correct 5, 7, or 15-year depreciation categories. In other words, our engineering-based cost segregation studies identify all, not just a small percentage of building components to correctly classify. I recently had someone exclaim, "But the total amount one can depreciate over the life of the building doesn't change." I told him that's true, but we've identified so many tens of thousands of dollars due back to the commercial property owner much sooner, which no CPA had ever unearthed. This simple analogy might help. Let's suppose that your spouse loans your brother-in-law $3,900 as an interest-free loan. Would you rather be paid back $100 per year over 39 years or $780 per year over only 5 years? The obvious answer is $780 per year over 5 years. For a business, this means dramatically more money now, not in the uncertain decades from now, in order for you to have the easy option of investing back into your business for new inventory, key employees, much needed equipment, R&D, and putting this larger cash flow back to profitable work for you for many years sooner. I've talked about the general principles of cost segregation, but how is engineering-based cost segregation different? Our strategic partner, CSSI, is the industry pioneer and America's premier firm in the industry, and they've conducted over 20,000 cost seg studies in all 50 states since 2003. 100% of CSSI's cost seg studies, which have yielded so many tens of millions of dollars back to their total client base's coffers, have been fully supported by the IRS. Their certified construction and structural engineers have the vast experience and supreme expertise which is required to know what is exactly behind the walls, floors, and ceilings so that each and every single component can be correctly segregated with completely accurate engineering takeoffs in order to precisely support each valuation. They know, for example, how each item should be classified and, if capitalized, exactly into what depreciation lifespan. In other words, the CSSI experts are always proficient in accurately differentiating between standard lighting, plumbing, and electrical components that get depreciated over 39 years and the large percentage of specialty components which can be depreciated over only 5 years. More importantly, the detailed report generated from CSSI study can be used by your accountant for years to come, especially if any building components become obsolete or destroyed in the future. We sometimes refer to this as finding money in the dumpster. Non-engineering based cost seg studies will not provide you with that kind of accurate detail which truly maximizes tax savings and cash flow back to you, but also which can withstand legal scrutiny for decades to come. The pros at CSSI never leave any stone unturned in their never-ending quest to maximize tax savings and cash flow back to you. After all, this is your money and you should keep more of it. Beyond the accelerated depreciation mentioned earlier, which reduces current tax obligations and increases earnings, there are other advantages to cost segregation. Keeping you compliant with all the IRS regulations and requirements is certainly critical, but the detailed report on all of your building components will absolutely prove to be beneficial to you and your accountant in the future. When the HVAC unit on the roof must be replaced, you will have all the information in your cost seg report to easily write off that component, thereby saving your accountant time and you money. Knowing just what's real property or personal property can get a bit tricky. Concrete floor in the warehouse, real property. Decorative tile floor in the lobby, personal property. Fluorescent lights in offices, real. Chandelier in the conference room, personal. Items that often get overlooked for accelerated depreciation are outdoor components like fencing, light poles, signage, security cameras, drainage, dumpster enclosures, and even the flagpole. Inside items overlooked include cabinets, window treatments, ceiling fans, communication wiring, and even the fire extinguishers. The pros at CSSI have seen it all and know exactly what to look for at your facility to get all the accelerated deductions you are legally entitled to. Anytime one brings up a tax strategy that saves money, many people automatically believe that taking advantage of such strategies will increase IRS scrutiny. With cost segregation, as you can see by the first highlighted quote, the IRS recommends their use in almost every purchase of a commercial property. Their caveat is simply that the preparer of the study should have knowledge and experience in engineering and construction. It's important to note that a significant number of non-engineering based cost segregation studies conducted only by the tax professional in coordination with the company's CEO or CFO have not been upheld by the IRS and have resulted in extremely costly penalties, fines, in addition to interest. The pros at CSSI have the years of experience and expertise to more than meet the IRS recommendations that can stand up to any scrutiny. You may be wondering if engineering-based cost segregation can work for you. Just 8 to 10 years ago, the answer might have been no, especially for properties valued under $500,000. Previous cost seg studies were not economically feasible back then due to the very high cost to conduct a study. Technology has brought the costs exponentially down during the past decade, and especially the past few years. As well, the latest tax laws and IRS statements have made it clear that the IRS prefers an independent expert with construction engineering expertise to prepare these studies for purposes of reliability. Therefore, the answer today is, with great likelihood, yes, you can benefit and profit if you meet a few simple criteria. The first criterion is length of ownership. Beyond 20 years, without significant updates, a property simply has too little depreciable life left for a study to be cost effective. However, CSSI has recently delivered very significant previously unrealized tax savings and cash flow back to property owners who have owned their properties for 20 years. Within 1 year is generally the optimal time to start conducting our studies, but CSSI can provide 100% cost-free estimates on tax savings from a construction budget for an as-yet constructed building, and then deliver the completed cost seg study when construction has been completed. So if your building costs over $250,000 and or you have spent over $50,000 on improvements and plan on keeping your property for a few years, an engineering-based cost segregation study will help increase your bottom line with tremendous profitability. It's certainly worth your while to have a 100% free property analysis conducted so you can receive your estimated savings and cash flow back to you report showing all of your savings. This sample of actual case studies of CSSI clients demonstrates the wide variety of building types that can benefit from a detailed engineering-based cost segregation study. The Auto Service Center had a pretty straightforward savings of almost $130,000. Another company funded their green energy project. CSSI found the office warehouse owner over $200,000 in land improvements that were correctly reclassified for 15-year depreciation. The restaurant owner was able to deduct the obsolete equipment he discarded. This type of deduction is often overlooked by companies that might replace a roof, for example. The owner of the wine storage facility received a tax savings of over $100,000. As you can see, we're able to help the owners of all types of buildings increase their bottom lines. Let's run through a simple example to illustrate how cost seg can generate real savings. We'll say this is your corporate headquarters building. To keep the math simple, I'll use $1 million as our building cost. Using a traditional 39-year straight line method of depreciation, you see the annual deductions in black in the table. You'll notice that you deduct $25,641 per year for the full 39 years. Now, when we reclassify 15% of the building components for 7-year depreciation and 25% for 5-year depreciation, the savings get pretty dramatic. The 7-year deduction total goes from just under $180,000 to, as you can see in yellow, over $500,000. That's an additional $328,000 in deductions over 7 years. Now let's run through an example of a residential rental property that can benefit from cost seg. This can be an apartment, rental condo, duplex, etc. Again, to keep the math simple, I'll use $1 million as our building cost. Using a traditional 27.5-year straight line method of depreciation, you see the annual deductions in black in the table. You'll notice that you deduct $36,364 per year for the full 27.5 years. Now, when we reclassify 15% of the building components for a 7-year depreciation and 25% for 5-year depreciation, the savings are once again pretty dramatic. The 7-year deduction total goes from just over $250,000 to, as you can see in yellow, over $550,000. That's an almost $300,000 increase in deduction over 7 years. Now that we've seen a couple of examples, let's look at the results of an actual cost seg study conducted by CSSI. This small bank owns 6 branch buildings spread out in 6 different small cities. Based on the simple, limited information needed to start the free property analysis, the estimated cumulative benefit was a little over $1.2 million. Once the CSSI team did their thorough study on each branch location, the actual cumulative benefit turned out to be over $3.5 million. Their actual results almost tripled the initial conservative estimate, but you will notice that the one-time 100% tax-deductible fee for the study remained the same. So, what do tax professionals think about cost segregation? As you can see by the quotes, they fully understand the value it can bring to their qualified clients. We specialize in working with major CPA and tax firms, as well as corporate and independent accountants, to provide the best engineering-based cost segregation studies in the industry. I've had several clients tell me about how they worry that their accountant might be offended by them bringing up cost segregation, as if it were somehow questioning how well they were doing their job. That's absolutely not the case at all. We enhance the accountant's role as a tax advisor, helping them build lifetime relationships by saving their clients even more money. In fact, there are countless examples of accountants using our services for all their existing clients which own commercial office properties after their first successful experience with CSSI. As well, so many of the leading CPA firms in America have actually engaged CSSI to cost seg their own commercial office properties. Our detailed reports provide them with precise tools they need to help their clients for many years after the study. A good example of this would be the write-offs allowed each and every time a building component is replaced or taken out of service. What's the next step to get you started towards significantly increasing your cash flow from tax savings? If you meet the criteria mentioned earlier in the presentation, all we need to get started on your free property analysis is just a little bit of information about your property. Just provide what you paid for the building and any improvements made to it, and have your accountant provide your current tax depreciation schedule. That's all we need to get started on a totally risk-free basis in providing you with a 100% cost-free tax savings cash flow report. Only 2 possibilities could happen thereafter, and both are positive for you. 1, you'll be able to rest well at night knowing that your current tax professional has conducted a 100% perfect depreciation schedule, which maximizes your total tax savings and cash flow from your commercial office property. Or 2, with great probability, you'll find that there exists very significant unrealized deductions and therefore very significant unrealized tax savings and cash flow due back to you according to the latest IRS laws. The pros at SafeBridge and CSSI will provide you a 100% cost-free savings estimate of the actual cash flow due back to you and a plan for moving forward to significantly increase your bottom line for many years to come. Contact us today at info@safebridgegroup.com or call us at 205-980-8408. Thank you.